The plan was so simple, right? The 4-year cycle plays out. We get a bull market similar to 2017, 2021. Bitcoin pumps to new all-time highs, consolidates for a while, smashes higher into six figures, 250K, something like that. ETH finally does something, goes to $5,000, $6,000, $10,000. After that's the real fun part. Alt season, everything pumps. Layer 1s, Layer 2s, AI coins, gaming tokens, meme coins. Everybody eats, man. It's a beautiful time. Maybe when NFTs make a comeback. Okay. Well, wake up. Sorry, it's March 2025. None of that shit happened. Not yet, anyway. Yeah, crap. Is this time different? Are we not going to have all that shit happen? So with Bitcoin and the $80,000 zone at the time I recorded this video, rather than above six figures, and the altcoin season nowhere to be seen, a mythical creature like a unicorn, let's ask whether this time is really different for crypto, whether there's still more to come, and if, well, maybe it's just the end of this 4-year cycle nonsense. So first of all, what made this bull market different? First off, the fact is that crypto is just way bigger than it was in previous cycles, meaning you're not at the beginning of the 0 to 1 moment. If you were buying alts in 2017, shoving tokens into DeFi coin slots in 2020, collecting NFTs in 2021, then yeah, you were pretty much in a pretty early space. You were operating in a very uncrowded arena. Right now, the crowds rushed in and it's a bit different. See, back then when the crowds came in, you had the chance to offload, man. It was player versus everybody. Boom, I got in early, sell. Thanks for buying my stuff, guys. Enjoy your $1 million monkey picture. In other words, it was kind of easy mode all the way. So basically, the earlier you are, the more upside you can capture. But the crypto market has matured. Returns have been diminishing, and that's kind of inevitable, to be honest. Bitcoin can't keep going up massively forever, right? Or can it? For perspective, the entire altcoin market cap was less than $1 billion at the start of 2017, hitting a peak of around $300 billion by the end of the year. And well, this year it peaked at over $1.6 trillion. Come a long way in just a few years. Plus, there are now way more altcoins than ever before. In fact, the dilution is getting absolutely absurd. Millions of meme coins launching on Solana this cycle. Dozens a month of new layer 1s and DeFi protocols and all this BS gaming tokens. Nobody cares. Nobody has money for that crap. It's absolute max dilution right now. None of this is really made for exciting price action. Oh, great to short new launches because they all seem to crater to zero. Now, you might suggest this all demonstrates adoption is occurring, which is a good thing. But is there any real retail interest in cryptocurrencies right now? Well, we're going to answer that question in a second. But before we do that, look, I want to take a moment to let you know how you can get $50 for free with Femex, one of the top crypto exchanges. Look, markets go up, markets go down, but you can trade both ways and make money both ways. Even if it feels a bit dirty making money shorting sometimes. And the OG exchange, Femex, is a great place to do it. It's available to everyone, everywhere. It has deep liquidity, all the top trading pairs, and currently they're running a crazy promotion that you may want to take advantage of. So you get $50 for free just for signing up using the link down below. You'll get a 20% deposit bonus. So you deposit $1,000, get $200 back, as well as a $1,000 trading bonus. Pretty damn cool, right? All you have to do, use the link down below to start your account, and you'll be eligible for all of those bonuses. Go check it out if you're a trader and you want to be trading in the markets and taking advantage of that offer, but also of all the trading opportunities available. Okay, so back to it. Retail crypto. Just take a look at Google search trends. You're going to see searches for crypto worldwide took a sharp downturn this month. Nobody wants to know about that shit anymore, man. Everybody lost all their money. They came in top blasted, boom. Bottom blasted, they're out. But also, even when crypto interest did peak so far this cycle in December and January, it didn't reach anywhere near the levels that it got in May 2021. We have not had the blow-off mania phase of the market yet. Maybe it still can from here, though. Just hasn't happened yet. Still, though, that doesn't mean that this cycle has been a disaster thus far, and I don't believe the cycle's over personally. I still think the best days of the market are ahead of us, but still, Bitcoin got above $100,000, guys. Hooray. Put that in context. It went on an enormous 2-year run from almost $16,000 to almost $110,000. And could you imagine telling someone just 10 years ago, or even just 5 years ago, that Bitcoin had crashed to $80,000? That would seem like a great price for Bitcoin, but that's exactly what happened. Perspective, short-term thinking, recency bias. What's changed, though, is where the price action originates from compared to 5 or 10 years ago. And the big change, of course, is ETFs, along with the constant bidding from players like MicroStrategy, which have bought up gargantuan amounts of Bitcoin and really lifted up the entire market with their bid. The ETFs have changed the Bitcoin game into a Wall Street game, meaning it's slots now go into portfolios and investment strategies just like any other TradFi asset, thus increasing our correlation with stock markets and our risk-on, risk-off indicators with stock markets. On-chain indicators, probably not as reliable as they once were, unfortunately. It's also worth considering that ETF buyers are not the same kind of gamblers that crypto degen natives are. MicroStrategy, they're planning on holding their Bitcoin forever. Michael Saylor is going to take the private keys to the grave. Funds flowing into Bitcoin will stop at BTC rather than rotating into all your random shit altcoins. That's at least partly why this cycle, there's been no sort of up only across the board alt season, just tiny niche pop-off narratives. The rules of the game, to an extent, have changed. You now have to hunt out short-lived category-specific pumps like AI agents, meme coins, dino coins, and none of these things seem to last very long. They last for a few weeks to a few months at best. Also, as Solana was the chosen chain this cycle, you could have just ridden that up alongside Bitcoin and actually got much bigger returns. But with the exception of Bitcoin and Solana, this again creates a more player versus player environment, hard mode trading environment. And another factor in all this, of course, was the prevalence of intense financial nihilism that's crept into the cryptocurrency markets, and it's got pretty damn bad if you ask me. So in case you missed it, there was a lot written earlier in the cycle about the idea of financial nihilism, which basically is kind of a harshly doomerish take on not just crypto, but really finance and the overall economic outlook. It's kind of crazy. Anyway, even down to general attitudes. Look, here's the summary of it. The idea is that all traditional modes of making it financially just don't work anymore for younger generations. Maybe real estate is the clearest example of this. A lot of people feel totally priced out of the property market. Property prices have gone absolutely bonkers. Wages have stagnated. The system's broken. The best option, therefore, is ruthless, nihilistic hyper gambling, the ultimate form of which has been meme coins in crypto, but you can see the rise of sports betting and other high-risk activities as a similar idea. From there, we got pump.fun, maximally extractive on-chain antics with wild amounts of criminal activity, pointless celebrity scam coins, a freaking president launching his scam coin in Argentina, some genuinely disturbing token deployments, people unaliving themselves after losing all meme coins. It's been bad, man. Absolutely bad. And that space peaked and dumped in just a very short amount of time, and it got to the point where near the end of it, we would see coins run from 0 to $500 million back to 0 in just a few hours. Pumps and dumps in plain sight, nobody gave a shit. That was ultimate nihilism in crypto. And that led, of course, to a lack of optimism about the big, exciting ideas. No one gives a shit about decentralization anymore. International remittances. Oh, CCIP, man. I'll put my nerd glasses on here. No, people just want to gamble on the next damn dog coin. Try to get rich. All that stuff from previous cycles where people were actually nerdy and wanted to see tech do well, people held on to assets, good assets, quote unquote, and they got their asses kicked. Believing in something has been a bad idea. We hope that value might emerge and remain sticky, but so far it hasn't in many places. The good news is that this kind of bleak financial nihilism might itself have been the short-lived thing, and that the long-term believing in something might actually be what wins in the long run. The meme coin casino looks pretty damn sketchy right now. It'll come back because human greed hasn't gone anywhere, but the customers are in a bit of a detox right now, wondering how all their chips disappeared so quickly. And just as the pendulum swing back towards outright gambling, it's likely to swing eventually back towards probably more utility. All the people who just got absolutely savagely burned and destroyed and wrecked by meme coin gambling will probably say, you know what, maybe I should buy some Chainlink. It's time. Grow up now. Grow up and buy some Chainlink like an adult. Look, more substantial projects are out there, and now that we see regulatory barriers falling down, maybe this stuff actually gets more bid and more attention. Also, one more thing to keep in mind, although this cycle is in many ways different, Bitcoin is currently relatively flat, and alts are nowhere near all old-time highs. I mean, not even close, right? We're only now approaching Q2 of 2025, and because, well, this time is different, well, what happens next feels unusually up in the air. We're really following a lot of what macro's doing. If the stock markets go to shit, crypto's going to go to shit too. If stock markets do well, crypto's probably going to do good because we have an increased correlation with the stock markets. The 4-year model might be slowly decaying. The ability for Bitcoin miners to sell into the demand that's been around recently and to affect the markets isn't really that big anymore. So we might see much more sector-specific moves, and there will be big blow-off tops, and there will be big bear markets and stuff like that, but maybe it's not going to follow the same rhythms and rhymes that it has before. Maybe the market's just maturing, and that would mean that it's not so much that this time is different, it's just that crypto's growing up. Thanks for watching.